Well, happy Father's Day, everybody. Hey, it's Shooter Scott Henderson, and we are going to go over swing trade nut. Let's just jump right into it. And of course, at the end of our presentation, please do review our disclosure. Now, I'm going to be quick today because I'm trying to get this out. It's almost 9 o'clock here. My goodness, boy, the day just passed. All right, so we are going over the week of June 16th through the 20th. The only thing we really added last week was KRE, UPST, and then we did put on that QQQ short and closed the blast thing too early. We still ended up with a net just under $10 for the week contract. Obviously, I'll let you guys review that in detail. Had a red close to the week. This was Friday's close. Only thing that stayed green was the industrial complex, but it really wasn't that green. There's not a lot of belief that this is going to and then oil energy did pretty well. But really, 2% is not that much. They're not expecting escalation. And Oracle did real well on the cloud. So I'm trying to look for names that are in that group. But to be honest with you, I'm not finding a lot of charts I like. So that's the challenging part here. All right, now Micron earnings are 2 weeks out. I'm looking at this as drive 1. So this is drive 3. So I think we get into just, maybe about this high. I think we get up to about 225, 227 on that wave 3. And then we get a back test. We could overshoot that with earnings and realize the outlook is going to be a fantastic thing here because apparently, and this is when I'm really more inclined to carry. Now, I might not carry the call into earnings itself, but I might put on some cash secured puts there with a little deep, 5 or 10%. In the money, so I have a safe zone there in case it misses for whatever reason. But I'm looking at 120 and 125 calls. Probably going to do a staggered strike. July and August, probably do the 120s in July and do the 125s in August. Breaks below 108.58, that would be my stop. So I'm giving it plenty of room. And of course, obviously read up on the numbers here of what we're going to have, potentially. Gives us some other scenarios here too as well and outlines your fibs. Risk reward is 9.2 on that trade, which is decent. All right, Kroger's into earnings. I'm a little early here. I like 63. I'm hoping we get a dump tomorrow on something that goes on in the Middle East so I can get a better entry here on this one. But really only I'm chasing, 75, $78 back to the upside. I'd prefer having something on here at 63. So I'm saying only give it about $1 in risk from there. If it gets below this demand zone, then I'm going to wait and see because then it could roll back over down towards the. All right, looking at Energy Transfer Partners, one of the only oil energy charts I like because we had this nice drawdown pulling back. We're holding this. I'm looking at this as drive 1. Maybe we get an ABC and then we continue. I'm willing to risk about 1680 on this. I prefer cash secured puts on this one just because of where we are in the chart. But I also like the idea of chasing August $20 calls, and they really weren't that bad as far as price. So that's my thought. Let's take a look at Constellation Brands. Now I am looking for this for a total reversion to the mean, which means we're going to come down to about 129. That's my thought. Okay. Initially I'm trading 152. So I'm looking at this as wave 1, which is extended, and it's not slowing down. And looking at this, it looks to me like this last leg is an ABC, and we have equality down here. It just looks like a reversion to the mean, and it's worth taking the risk this late in the game because we are late. I'm not going to tell you we're not. All right. However, when we have a confirming low, okay, what are we always looking for? One more divergent lower low. So I'd say 152 is pretty much a gift. At $165, that's $12 trade, right? That's a nice trade in STZ option. So I like doing 160 July and maybe August or September 150. Go out there a little bit. 25% in the 150s, the balance in the 160s. Or you could even do 155. So you could do even more stag. So let's look at T-Mobile. Now I'm a bit early on the chart here. I like it at 221. But again, I'm hoping that we have some kind of risk off event that pushes everything down really quick to give me a better entry on this chart because this is a beautiful broadening formation. So we're going to come back up and test these highs. This is primary wave 3. So typically we can guess where our fib retracements are going to be. So I'm going to look back for the 61.8 for 256. Now this is an August or September type trade. However, I don't mind selling some 200, maybe even 210 cash secured puts on the next flush that we get here. But I wanted to put the chart out there so you guys could your common share traders could put on some good to cancel orders at that price point, because I don't think it'll be there very long. I think it'll be a push and done kind of thing. Now, our risk reward on that one was an 8 out of 10. So that was a pretty good number. I don't know, did not have, but that's what I have for this week, folks. Great trading. Until next time.